Part D, refer to matter 3. Prepare the journal entries of Sunflower Limited to account for the employee benefit expense in the statement of profit or loss and other comprehensive income for 31 December 20.19. Journal narrations are not required. 10 marks. Okay, guys, new page as always. Indicate that this is your Part D, and I have indicated as a reminder, I need to determine my number of employees, my rate per day, and my days. And then, as always, I prefer to have a timeline. Guys, with the timelines, you do this for yourself. Therefore, you don't have to do this neatly. This is your workings. Okay. Now, let's just briefly read through the information again. Annual leave. It is the practice at Sunflower to increase the employees' gross salaries and consequently the total cost to company with 6% on an annual basis. The annual increase is effective on 1 January. Leave pay accrual on 31 December 20.18 amounted to 1,744,200, of which 697,680 was paid out during the year ended 31 December 20.19. Therefore, on my timeline, our balance 1 January is 1,744,200. They've paid out 697,680. Therefore, this is the remaining leave balance, which still be included in our statement of financial position. But remember, if we need to prepare the journal entries for 31 December 20.19, this will relate to the amount that we expect to pay or to use in 20.20. You with me on that one, guys? Okay. Therefore, when we refer to the scenario, the indicator as the number of working days is the 260. They indicate to us that the following information relates to the employees of the company for the financial year ended 31 December 20.19. Number of employees, we have 200. Average gross salary, 240. Average cost to company, 285,000. Now, guys, important here, hey? If the employees use the leave, you agree with me that the entity will have to pay the cost to company value, okay? If the employees will be paid out the leave, we will use our gross salary, right? Let's have a look at the information. Annual leave entitled per employee will be the 26 days, and they have taken 16 days. Therefore, we are able to identify that there is still 10 days remaining. These employees can carry forward any annual leave days not taken during the year to the following year. Any annual leave days not taken by the end of the following year will be paid out in cash at the end of that year. Therefore, if they pay this out in cash, guys, think about this. If they pay this out in cash, we will have the gross salary, not the cost to company, because your cost to company will include all of the other additions made. Okay. Based on past experience, 60% of the unused annual leave days at the end of each financial year will be utilized. They will use this in the following year. It is expected that none of the employees will resign before the end of December 20.20. No journal entries have been posted yet for the year end 31 December 20.19. Okay. Now, we need to determine, if you look at our timeline, what will the leave balance be at the end of 20.19 relating to 20.20? We expect that 60% will take leave, therefore 40% will be paid out. If they take the leave, this will be based on cost to company. If it's paid out, this will be based on the gross salary. You with me? Okay. Now, let's first determine the employees that will actually take the leave take. our number of employees will be the 200 times that rate will be 285,000 times 1.06. Remember, we've indicated that this should be cost to company. If you look at the given scenario, our cost to company will be the 285,000. You with me on this one, guys? Okay. We have our number of days, which will be the 26 minus 16. And the total is the 260 days per year. Okay? Therefore, this times the expected 60%, which we expect to take leave. And this will be 1394308. Okay? Now, for the employees that we expect that we will have to pay out, I'm going to make use of black, guys, not blue. Okay, so we will have to pay them. Again, guys, we have our employees, our rate times 1.06. The rate will be the 240,000 because no contributions will be made if they pay this out, guys. Okay. Therefore, this is the 240,000 times my days, which will accumulate, divide by 260 days per year, times 40%, and this will be an amount of 782,769. Therefore, my total leave at the end of 20.19 should be 2177077. Currently, this is the 1046520. Therefore, we will have to recognize a difference to increase this to the value of 1130557. Now, if we increase the provision, we will have to debit our expense and credit the leave pay accrual. Therefore, we will debit our employee benefit costs, profit and loss, and credit our leave pay accrual statement of financial position. Right. Okay, bonus. Last section. They indicate to us, in July each year, Sunflower distributes a bonus to the employees, which is equivalent to 25% of the previous financial year's profits, right? And they indicate to us, on 1 January 2019, the bonus accrual was 125,000. The profit for the year is 615,500. The actual bonus paid in July was 1154531. Therefore, it's easy for us to identify that our opening balance is the 1312500. An amount was paid during the year to the value of 1154531, and they need to recognize, guys, 25% of the profit. Okay. Therefore, the remaining amount between the opening balance and the payment was 158,149. But the amount at year end should be the 6157, which is the profit. Look at this, guys, the pink amount times the 25%. Therefore, this is what they need to provide for to be able to pay. Okay, you with me? And this is 1539375. Therefore, the balance of 158,149 should increase to 1.5 million. To be able to increase this, we will have to credit our accrual and debit our expense account. Therefore, we will have to debit our employee benefits expense, profit or loss, credit the accrual with an amount of 1381226.